Welcome to Quiz the Coach with Alfie Townsend. This is where we clear up some misconceptions that you may have based on people that are giving you advice out in the marketplace, whether it be your friends or whether you're getting information from the internet. The wrong advice can definitely derail your portfolio. And really, the person that's here to answer these questions and give you sound advice is Coach Alfie Townsend. Coach, great to see you today.
You know, I'm thinking here as you're talking, and there's some times doing this for 30-something years that we gave solid advice, and they took that advice and they asked someone that knew nothing about it, but they changed their mind because they got bad advice from their friend. So this is going to be, these are some questions, John, that will come up, and they're going to hear it's true and false questions, and we're going to find out which ones are true and which ones are false, or they might have a combination of both in there. But the advice that you get, make sure it's from someone that you trust and that they're professional in that field. You don't get advice on something like this from someone that has nothing to do with this business because you're a friend of theirs, because that can derail your retirement plan.
Yeah, it's a great point, because what you're saying is so many people listen to so many voices out there that influence their decision making in their portfolio. What really differentiates you from like a broker or like an advisor? Because there's a lot of people out there that are peddling services that really don't have the expertise that you have in the field, and why would they want to talk to you over somebody else?
Well, that's a good point, John. You know, as a certified financial planner, that's number one. To be a CFP, go look at what you have to go through to become a certified financial planner. That's number one. And there's not too many of us in the country. And then you want to make sure that you're dealing with fiduciaries, and because a fiduciary is going to look out for your best interests. And that's important. You want to look, we're going to look at for your best interest. And being independent, John, we can have the best of the best because we're not tied to any one company. We're not having a company telling me what I got to push for my clients, because we're independent. And that's what you want. You want independence, and you want to be able to have an advisor that can have the best of the best of services that we can offer, and the fund managers that we can offer for our clients.
Yeah, great point. Reminds me of that commercial where the DJ was looking like a CFP and basically deceived the people, and they took his advice, and really he didn't have the knowledge. So what you're saying is very, very important, and that brings us to our first question of true or false. Long-term care insurance has become too expensive for most people to buy. Is that something true, or is that false?
I would say that's true.
Okay.
It is very expensive, and they have, the thing about long-term care is you need to have it, but it's hard to get, number one, because it has to be underwritten, and a lot of times, people have it, and then the premiums go up. They increase, and there might be no increases for 5 years, 10 years, and then they start hitting you with increases. So with long-term care, it's something that you need, but it is very hard to keep. Now, there are new programs out there. We have a couple of them. Some of them are with our, an annuity that will double the income if you need it for home health care. So if you have IRAs, you can have this money sitting in there, and it's paying you, let's say it will pay you $35,000 a year for life, you and your spouse. But if one of you, that's what's nice about it, if one of you need it for home health care, you can't do 2 out of 6 activity daily living. What it does, John, it doubles to $70,000. Even though it's your IRA, if your spouse got sick, she could use it. You could let her use yours. And it would pay up to 5 years and then go back to $35,000 a year for life. So there's new programs out there that they didn't have when I first got in the business. In the 80s, when I first got in the business, they didn't have these great programs that they have now, that you don't have to pay for long-term care, just an added benefit for you to have.
That's a great point, and you're helping the whole person, not only just in retirement, but you're looking at their whole complex individual situation, which is great. Well, the next one is an individual who is 70 and a half does not have to take out a required minimum distribution from any retirement money, including his current employer, 401k, and his IRA. Is that something that's true or false?
Well, half of it's true. Okay, if he has a 401k at work and he's still working, he does not have to take out minimum distributions.
Okay.
Okay, But if he has an IRA, if he chooses not to take it out, that's his choice. But it's a 50% penalty on what he's supposed to take out. So if he was supposed to take out $20,000 that year, the IRS is going to be sending him a bill for $10,000.
Wow.
That's why if you have IRAs, what we want to do is we want to just combine them, accumulate them, and put them together. And then what we're going to do is make sure that we don't miss those required minimum distributions, because that is so important to get that right.
That's great sound advice, and you owe it to yourself to get a second opinion. A lot of people are giving you advice out there, and a lot of times misconceptions and decisions that you make based on wrong information can affect you adversely well into your retirement years. You want a financial coach on your side. Alfie Townsend is Southwest Florida's financial planner. He's a certified financial planner, and you can sit down with him in Fort Myers or Naples. He has 2 beautiful offices. Call that number appearing on your screen. You owe it to yourself to get a second opinion and sit down with the coach. We want you to stay tuned. We're going to have some more talk on retirement right after this break, so don't go away.